So this is the last day, day 7. Do you feel like you've adapted to weekly accounting? Do you find yourself more accountable than you were before? Dare I say more in control than you were last week? If the answer is yes, then you're well on your way to making this not just something you did the first week of August, but something that you do every week. As we've talked about along the way, monthly accounting does not work for restaurants, which means for you to reach your goal and make sure that this year is better than last year, regardless of what's going on around us, the one thing that we need to do is find out how we hold ourselves more accountable. How do we hold our business more accountable? And all of that stems from weekly accountability. So along the way this week, we've set a forecast all the way down to our cash flow. We've learned how to track our cash flow every day. We've talked about owner compensation. We've talked about debt service. And we've talked about setting goals for your team so that this isn't just something that you do, it's something that your team does. And collectively doing this every week, we are able to find the things that aren't working and fix them. Because I promise your business, the things that you feel are wrong aren't wrong because you're not trying. It's wrong because we're not finding a solution. And by seeing what's wrong every week, that gives us 4 opportunities to make things better. So today, what we're doing is our scorecard. Now, again, we're going to approach this in a curious way. We're not going to approach this in a, oh my God, it's so bad. Last week was so bad. But what we want to do is get in the habit of learning from the prior week so we can make better decisions this week. So that every week we are adapting, pivoting, and making sure that the decisions we're making make sense based on the numbers that we have. So when we look at our scorecard, we're going to go back to our weekly targets, right? Our revenue, our cost of goods sold, our labor, and our operating costs. And we're going to write down the actuals for all of those numbers. What were our actual sales? What were our actual cost of goods? Now, if you're not sure, this goes back to now we're checking our cash daily. So as you're checking your cash, worst case scenario is you can grab all of the things that you spent money on last week and put that in for COGS. I don't want this to be something that's held up because you can't get information from someone else. You are the owner of this business and you need to find this information and not rely on other people. You can find this. It may not be perfect. It's not going to be the final P&L that goes to the bank, but it's enough to make sure that you know exactly where you are and you can trust it. And trust me, using your bank statement, that's probably the thing that you can trust the most, right? It doesn't have any of the timing or invoice versus, right? It's strictly cash out. So if you're using that, that's fine. Same with labor. Yes, it would be great to have a detailed labor report with hours and all that. Yes, that's important. But if this last week wasn't a payroll week, what can we find out about our labor? Can I go and use the last payroll and divide it by 2? We need something there because we know people worked in our business last week. And same for operating costs. For that, we're literally going to go down our bank statement or our credit card statement and put everything that is not related to COGS in that bucket. Not perfect, not pretty, but that's the most real number that we can find for did I make money last week? And if I'm doing my cash flow check and checking my cash every day, I should already have that answer, and now I'm just seeing the why. The other thing I'm looking for in my scorecard are the percentages, because the more you know about your percentages, the easier it will be to set targets. So we know cost of goods sold, that's probably the percentage that we know the most. Okay, I want my cost of goods sold to be 30% of my sales. That really helps me know that if my sales were to go up by $10,000 next week, I need to buy X amount more of food. So as we talked about yesterday, that drill of setting a budget for your back of the house based on sales, that really helps to make sure that people are aware of the changes in the sales targets as well as the cost of goods. So that's the percentage we already know. But in the scorecard, we're going to look at all 3 of our buckets as a percent. So labor percent, I like to use an all-in number for labor. The reason why is you as the owner, your managers probably know that cash requirement pretty well. So what we're going to do is take that cash requirement, and the only thing we're going to add here is divided by sales to come up with a percent. So if my payroll is bi-weekly, ideally I'd pull the sales for that same time period, those 2 prior weeks, and that's my labor percentage. That helps me to know that for my weekly forecast, I can just use that percentage. So if I did that exercise, I ran payroll, it was $30,000. I'm going to take my 2 weeks of sales for that time period, and that tells me my labor is a 37% all in. So now for my forecast, I could just use 37% this week, knowing that it's not a payroll week, but I know that that percentage is right because that was based on my last payroll. And then the third one is operating costs. Now here, I like to use the actuals for what you spent. We know this is going to vary wildly. So if you see that it was a way more profitable week than what you expected, or way less profitable week than you expected, chances are like rent hit, utilities hit, something that's really a monthly expense hit this week. Now that's okay, because again, this isn't the last time we're doing this. We're going to do this every week. And in this scorecard, we're looking at actuals. So now I have something really meaningful to go back to my team with. I can go back to my team and say, you beat your COGS number by 2%. Your labor number is 2% higher. Let's try to work on that. Giving us tangible results to go with our forecast. All with the idea of looking forward. What can I do this week? Because now I'm on a Monday and I have 6 more days till I do this again. What can I do this week to make it better for my next time that I'm doing my scorecard? But the scorecard is a non-negotiable. We must be looking at our business every week and holding our business and our team accountable. So as you'll see today, we have a great video about the scorecard. We have an example of the scorecard. And again, don't overthink it. This isn't perfect. This isn't replacing your bookkeeper or replacing your tax accountant. This is giving you and your team real numbers to look at and adapt to and pivot from if we have to every week, and making sure that there's nothing holding you back from having real information about your business every week. So I hope you've enjoyed this challenge. I think there was so much useful information in this challenge. And if you have any questions, please reach out to us. We are here to help. We are offering free 30-minute sessions to help you get this all built out. We believe in you and your business, and we know that you can rock it this year, regardless of what's going on around you.